talking about that takeover of Nielsen. Not the first time, by the way. For those who may remember, this is a company that went private back in 2006. Interesting, back then the multiple was 13.4 times 2005 normalized EBITDA. That was a real club deal. I mean, everybody bought that thing back then. Blackstone, Carlyle, Hellman and Friedman, KKR, Thomas Lee. Oh, my God.
Were the Elks in that?
And they took it public in 11, and now it's going private again. And you can see the move up in stock is a result of what was a significant increase above what was the original, and this got leaked, original potential price. Elliott is the main engine here, along with Brookfield. Elliott, though, will actually control the company. They're providing more of the equity. More on that in a moment. You can see it right there. $28 a share. Equity value $10 billion. You got debt. All adds into about $16 billion. That premium, by the way, and again, the way they moved up from the 25-40 bid to 28, ultimately a 60% premium, I'm told, represents the largest large-cap LBO premium that you've seen in the last 5 years. And some history here. Nielsen had rejected 25-40. Windecker. This is a fund people really weren't aware of. This was kind of reminiscent in the sense almost of Archegos. Suddenly, they own 9.6% of the equity, but also another 14.4% in derivatives. This could become an issue because we didn't hear about Windecker in the press release. And in making calls on this, nothing in terms of whether they're supportive now. They said they thought the company was worth as much as 40. Why is it potentially at least important? Well, this is a UK company. They're going to do it under a scheme of arrangement. You need 75% to be 75% of the shares. And if he were to convert those swaps, well, potentially it could be a gating issue, forcing them to go to a tender, which would mean they only need to buy more than 50%. I'm told they're willing to do that. Could be a bit of a timing issue, but ultimately doesn't seem to be standing in the way of Elliott's ability to get the deal done. As I said, or as we showed you there, 55% of the $5.7 billion equity check, $5.7 billion equity check is being provided by Elliott, so they will be the majority holder in a sense of the company, the rest being provided by Brookfield. Financing is in place. So we talked about earlier when we talked about the Jefferies quarter, it's been a difficult market for financing, but you can get it done. And here they did. I'm told as well, in part, they were able to do it because it's a large cap LBO. People were familiar with the credit as well, even back from the previous LBO. And they started talking about this deal prior to the hostilities in Ukraine. So all of which has allowed them to get this deal done, banks being the key financiers for what's going to be almost, 10 plus billion in bank financing. About 11 times EBITDA this time, Jim, as opposed to the 13.4 times when this company was taken private the first time for 16 years ago.
Wow.
Yeah.
Well, what's interesting is there's no Justice Department issues because it's a PE firm. But I wanted to ask you about the United Health deal. Would that be?
They are an aggressive acquirer,
aren't they?
United Healthcare, man. They have been, here, there, and everywhere. You're talking about obviously this LHC deal, $170 a share. I don't have a lot of visibility into antitrust concerns there, Jim, so I just don't have an answer for you.
They've at-home business. UNH is one of the great companies of our time, and if you think about the fact that they just got crushed on a previous deal with the government.
Right? Oh, that's right. Change Healthcare. Right.
Incredible. But I think the Nielsen's very interesting because what you have to hope for, the bears have to watch out that once again there'll be deals. David, FedEx up 9. I keep thinking about what you said. I'm looking at FedEx's market cap versus, say, United Parcels.
It's the differential is staggering.
More wealth created by UPS.
Yeah. Final point quickly on Nielsen. Elliott has become a real power in PE. They have, I wouldn't say they've shifted their business, but activism is what we know them for. Track record there, I mean, man, they still own a lot of AT&T. That hasn't done much for them. But on PE, they have already seen some significant wins, of course, as well. With some of the deals they've done. Say, Athena Health, thank you. Right? Exactly. Athena Health was a huge win. By the way, they sold it to another private equity consortium. But we'll see how they do here. But it's a big deal.